You put out a note last week after Reserve Bank Governor Jill Marcus spoke to a business conference in Soweto, and she sounded a little bit hawkish, though you said in your note she didn't really sound that hawkish. You met her yesterday. Do you stick with that?
We didn't just meet her yesterday, we met a number of other MPC members as well, and the definite impression we got from the SARB is that they are in absolutely no rush whatsoever to be hiking rates, and they are very specifically looking for these signposts around employment growth, around second round effects and actual evidence of second round effects before they hike. And to me that all sounds like quite a heavy burden, if you like, of evidence you have to gather before you can start hiking rates. So whereas actually the market is pricing in rate hikes earlier than November even now, with hearing here from some local banks, the risk case is perhaps even July from their point of view. For me actually it's moving later, back towards January, and that is quite a contrast to what's going on in the market. But the key thing, I think, the really interesting thing from the SARB is that they are not worried about being late because they, in the cycle, are behind the curve, because they don't think it will have that much of an effect on the interest rate on the inflation outlook or the growth outlook, and that's quite a surprise, and perhaps means more hikes later on is obviously what's traditionally happened in South African interest rate cycles when they have been late. Do
you agree with the approach they're taking at this point?
Well, I think in and of itself, perhaps they've constructed a nice story for themselves, but I've always been much more bearish on inflation. I've seen second round effects coming through the end of this year. We've seen now in some of the surveys businesses' ability or willingness to price on cost push pressures seems to be increasing. So I think, I mean, we're not going to talk about a blow-up inflation scenario because they say a quarter late or so, but it's about basically this debate about where long-run inflation is. Is it within target or is it outside target? And this for me reinforces the fact it's probably just outside target in my view.
Do you see a subtle change in monetary policy coming through on the Reserve Bank side, and perhaps pressure from the government, particularly after the new growth path was outlined late last year?
I don't think that's necessarily the key influence. I think it's more generally since Jill Marcus has come in, and comparing meetings with her, and I had several meetings with her, with meetings with Tito in the past, there is a much greater emphasis on flexibility of monetary policy. We heard that yesterday from speaking to Rashad, the new MPC member. Again, an emphasis on flexible monetary policy, taking all this holistic view, all these different indicators into account. In general, when you take an approach like that and you're less inflation specific like the ECB is, you're more likely to be more dovish. So very much in my mind it's confirmed that this shift over time from under Tito and Bweni, when the MPC was probably slightly on the hawkish side of neutral, to now slightly on the dovish side of neutral.
You don't want to repeat past mistakes though, so perhaps going into the cycle a little bit too late to start hiking rates. We saw what happened last time where we had rates still too high too late and we had to cut them quite dramatically.
Well, there was always the benefit of hindsight in 2008, and it depends what you were looking at. I think in 2008, if you were looking at the signs of momentum in the economy, they were starting to slow already, and the economy would have probably gone into recession eventually anyway. But again, under that MPC at the time, it was very much about those core second round effects, and again, there was a slight caution there, I remember, and they had to look for strong evidence. There were issues with the SARB models in terms of actually forecasting second round effects, so again they had to wait for evidence, and hence they kept hiking, perhaps a little bit too much. But I think at the time, with the evidence base available and the bias of the MPC, perhaps not necessarily an outrageous decision for them to have made.
How are you seeing the momentum in the South African economy at the moment?
Well, it's been quite surprising coming here. Everyone is everyone sees all the growth around approaching 4% or so this year, but everyone thinks that's really bad and very pessimistic about it, and points to, say, credit growth numbers, which range sort of 7% or around that number. Whereas compared to a lot of other emerging markets that I cover in Eastern Europe, so that's actually a pretty good rally rate for the economy, and versus potential as well for South Africa, that growth rate isn't that bad. But it's very interesting seeing in Pretoria, in the public sector, the concentration now on the makeup of growth seems to be much more important, both the MPC and for the government more generally, job creating growth, this sort of thing. So that is really, I think, the key, and why people are perhaps slightly more pessimistic than the headline growth numbers would suggest.
Talk to us about the Rand, because we've got that Rand still trading just below that R6.70 mark, and I think it's astounded everybody that it has come back down to there. We've seen a bit of a carry trade resume, and the Rand obviously helping to shield us from inflation. We have seen the SARB seeming to cut back on some of its buying that we saw very heavy at the beginning of this year.
Yeah. Well, that was a key question that the clients I brought with me were trying to get out of policymakers, was what's happened to the debate on the currency policy. It does seem to have died, and I think definitely across government, speaking to different departments, there is a sense now that the costs were too great to do anything dramatic. The SARB's sort of conservative line perhaps won out somewhat, especially when they consider the cost of sterilisation last year, which was obviously pretty hefty. So I think the debate has died down for now. That means that later in the year, I think we're less likely to see further currency policy measures, and so therefore really that's a less of a pressure on weakening the currency. So actually I'm probably going to be revising my dollar-rand forecast down slightly for the end of the year. But in the short term, certainly we're seeing money flow back in. We're seeing Japanese money flowing back in, which is obviously important marginal flow in the currency. And as you say, I think it can be supportive, albeit volatile within a sort of 6.68 to 7 band, can remain there sort of flattish for the first half of the year certainly.
Do you think the Reserve Banks also realise that the value the rand can have at these levels against inflation for us at this point?
Well, whenever I go to the SARB, they always know that I ask a cheeky question, and the cheeky question was given to me by a number of different clients, which is basically, does Jill Marcus like a strong currency because it means she never has to hike rates? And although that's probably slight exaggeration, I think actually the simple answer is probably yes. She would never ever dream of managing the currency to where it is in order to mean she has to hike rates less further down the line. But I think the MPC is happy that they have this additional help where they are now.
So what are you penciling in now for inflation by the end of the year for the rand, and when would you expect that first interest rate hike to come through?
Well, so I'm still digesting the whole trip and not come to a firm decision yet. So my baseline for the hike is November. I think I'll probably still keep that, but highlight the risks of later into January. In terms of inflation, perhaps with a slightly stronger currency in my forecast, that will come down slightly, but probably still certainly out of the band by Q1 of next year. So I think very much for my thinking around interest rates now is that we have a very slow start to the cycle as they gather this body of evidence, but then they perhaps have to accelerate later on through the end of 2012 and 2013.